We are talking about technology, and the word disruption was very much a part of our topic today. It takes a majority of users of the traditional market, right, from their traditional behavior into a new behavior, and once they do that, they've created a new market. That is what disruption is all about. Uber is an example. Literally, almost no country in the world that doesn't have a ride-hailing service. Today, if you want to watch the latest film coming out, you just go to Netflix. As a result of Netflix, okay, the whole world now knows what Nollywood is all about. So these things that we take for granted, just know that 10 years ago, 20 years ago, the world did not function like that. So this is what disruption is all about.
I don't hear them. Start. How did they pay and set?
So I never hear about FIRS tax promax. You don't need to waka. On your computer, you go just pay your tax and file your return. Even your phone, if you don't sabi how to do it, you can enter any FIRS office or call a tax consultant. Make I tell you now. Go to where you going to?
I want to go and pay my tax in the new office. They said they want to lock my shop. I want to run and go and pay. So till I come back.
No, go anywhere. You can pay your tax using your phone. Don't you have a smartphone?
To put it here, my children bought it for me. I'm hiding it. There are thieves everywhere in Nigeria now.
No, you can. Okay, you just go to the Retiras platform, the technology there.
MTN is going to pay for me.
Yes, of course. It's free of charge.
So I can pay using this one.
Yes, you can pay. Open Go. This is a Plateau State integrated administrative system. Put your details there. Your details, your name, your bail data. Your phone number. There you are.
I'm going to go and tell the market women that we can pay tax without any problem. No wahala. Payment of tax made easy.
Yes, tax payment has been made easy. Everybody should use the technology to pay their taxes.
Those were clips from the 24th Annual Tax Conference that just ended last week. Those men and women are tax administrators and tax practitioners. Yes, taxmen and women do have fun. The Annual Tax Conference is here, the yearly event of the Chartered Institute of Taxation of Nigeria. This is the biggest event of the Institute. This event brings together tax administrators, tax practitioners, tax consultants, the who is who in the taxation subsector to brainstorm, share ideas, and proffer solutions to issues affecting the Nigerian tax system. This year's edition was held at the International Conference Center, Abuja. In the course of the 3-day event, several papers were presented and discussed by leading lights in the Nigeria economic space. The annual tax conference kicked off on Tuesday, the 17th of May 2022, with an hospitality night to welcome participants who came from all parts of the world. In the morning of Wednesday, the 18th of May, the conference took off with the first paper presentation on the theme of the conference.
Essentially, people move from one place to the other, goods move from one place to the other, money flows from one place to the other. And what globalization basically describes is the phenomenon where the rate at which this is happening is unprecedented and is causing the world to work very differently from the way we understood it even as recently as 30 years ago. One example is the coronavirus. Late in 2019, we heard that in Wuhan, China, something happened. 2019. This is 2022. And there is nobody in the world that hasn't been affected by this virus. Just as we were thinking that, okay, we've dealt with one crisis, a global health crisis, then Putin-led Russia invades Ukraine. Today, oil prices are near double. Energy prices have gone haywire. Food prices are going to the point where countries are beginning to lock down their food supplies. And again, we see global turbulence as a result of the decision in very far away Eurasia. All countries of the world beginning to face disruption as a result of this force called globalization. Now, ironically, even in 2021, the value of global trade reached a record annual volume of $28 trillion. Why do I say ironically? This is pandemic period. This is an increase of 25% compared to 2020, and an increase thereon compared to 2019, because there was a slowdown in 2020. We know what GDP is. I'm not going to define it. But the important thing is that the sum total of the gross domestic product of each country, that is what accounts for the world's GDP. When a country's GDP rises, it indicates more economic activity for the world, not just that country. It grows world GDP. Of course, when a country's GDP shrinks, world GDP also shrinks accordingly. Now, of course, the overall continuous growth in global GDP generally, apart from when you have a global economic crisis and maybe a global recession, you tend to find that the GDP continues to grow on a global basis. So it means that even while some may be lagging behind, there are others who continue to power the world. I have this really great slide that I commend to you. It shows the global GDP almost like a ball. And you can see some countries there. If you can see the country, it means that its contribution to global GDP is relevant. If you cannot see the country, it means that its contribution to global GDP is very negligible. 4 countries, US, China, Japan, and Germany, are responsible for over half of the world's GDP in nominal terms. Now, one of the reasons for the fact that as the world GDP is growing, and certain nations are repositioning themselves, particularly China, particularly India, in terms of their contribution to global economic productivity, is why Africa is where we are. One of the key reasons is our inability to find our place of relevance in the ongoing 4th industrial revolution. That revolution, this ongoing 4th industrial revolution, driven by technology, is Africa's greatest example to change its narrative. Not surprisingly, the entrepreneurs and organizations that own the intellectual property driving this digital revolution are reaping extraordinary financial rewards. According to companiesmarket.com, 6 out of the 10 most valuable companies in the world in 2020 leverage disruptive technology to create their wealth. Apple, Amazon, Google, we call it Alphabet, Facebook, I think that's Meta or Meta, I'm not sure, Microsoft. They generated, these 6 companies generated $1.4 trillion of revenue in 2021. $1.4 trillion of revenue. Now, the importance of their contribution to global economic activity and global economic productivity, in other words, GDP, is best illustrated that the combined revenue of these 5 companies is 50%, actually greater than 50% of African GDP. Now, in regions where these companies are yet to operate, such as China, where they don't operate well, China has birthed its own national champions. Ant Group, Tencent, Baidu, Xiaomi. These companies I'm mentioning generate tens of millions, approaching 100 per company of revenue annually. That is why you saw China's size in the GDP table so large.
Mr. Aig-Imoukhuede proceeded to draw a relationship between globalization, digitalization, and taxation.
Taxes, interestingly, are a critical measure of how a nation's development can be assessed. What the tax to GDP ratio does, once people hear tax to GDP ratio, they think that it is like a score of revenue generation, and a country should therefore be happy if it's scoring high. That's not the purpose of the tax to GDP ratio. There is an assumption that a well-meaning government recognizes to grow in a sustainable fashion, it has to create an environment where money is made, productivity takes place. The only way to create that environment is to invest in certain infrastructure, health, education, those basic things that any nation, any well-intended and well-meaning nation recognizes, without which it cannot grow. So it is like, what's the word now? Chicken and egg. And the tax to GDP ratio tells you the point at which that relationship between investment into a country's capacity to perform and the output as a result of it, if you are not at 50% or thereabouts, you are likely to fail. You will not develop. Okay? So that's what the tax to GDP ratio is all about. And to prove it, a 15% tax to GDP ratio, the World Bank has studied this and so on, seems to be the minimum threshold required for a nation to operate on a sustainable basis, okay, that will lead to development. The wealth generated by disruptive technologies provides a new vista for nations who seek to expand the fiscal space for national development. The owners of this new wealth have control over an intangible factor of production, which is this. This is what is generating that wealth. That's also why it's very difficult to tax it, because it moves. I can be at Bar Beach and I'm generating wealth in Malaysia. So, let's start asking ourselves questions. Have we sized this opportunity? Do we have a meaningful national strategy to take advantage of this opportunity? Another issue we must start to think about is these type of products and services, which form the basis of the new wealth of the fourth industrial revolution. They are not traditional goods and services, and they do not fall into the traditional definitions that guide what we call consumption tax and our understanding of consumption tax. So what are we doing about that in our own system? As countries improve access to identifying people, monitoring people, and tracking their financial transactions, what are we doing in Nigeria? Despite our low tax to GDP ratio, the tax compliance rate of major Nigerian corporates is extremely high. So Nigerian corporates that succeed and become big actually pay their taxes, particularly those of them listed on the exchange, Nigerian Stock Exchange, now NGX, which I was once president of council. I actually don't see big challenges in taxing successful Nigerian Amazons and so on, if we can create them. So first of all, let's go create these things though, because they will pay their tax. So I don't think our problem is going to be what the other nations have in terms of tax avoidance on the part of big corporates. But the question is, those companies outside Nigeria that are generating huge revenues from our 210 million people market, which is going to be a 400 million people market in 20 years or thereabouts, we are not entering into their taxes. We're not getting a share of that revenue. And we must be much more strategic. Now, when you have this demographic advantage where you may account at some point as much as 3 to 5% of the global market for digital goods and services, if the businesses that are generating that wealth are not in your jurisdiction, if you don't have a national strategy to fix that, then there's a problem. And that's the kind of thing that this conference must be solving. Nigeria is a huge consumer of Netflix. huge consumer of Twitter, huge accountor for cryptocurrency activity across the world, the second largest cryptocurrency market. Understand it, manage it, use it as a resource to develop yourself. Don't fight it. Manage it and control it. I want to describe how one entity describes such goods and services. If you received it via the internet, if it arrives in an email, or you download it on a website, or you access it by logging onto an online portal, this product originates and lives in the digital space and potentially can be taxed. E-books, images, movies, videos, downloadable and streaming music, cloud-based software, software as a service products, websites, hosting services, internet service providers. That is our huge informal market, as we term it. That is how we can recreate this nation, to understand it, manage it, and bring it into the tax net. And the amazing thing about digital technology is that the very nature of the innovation itself provides a well-meaning government the ability to identify all tax registrable businesses and all digital product consumers. And then the greatest thing is that the platform itself is your tax collection platform. You don't need to create another thing.
Mr. Aig-Imoukhuede's paper was discussed by a panel of 3 discussants. One-time Executive Chairman FIRS and Accountant General of the Federation, Dr. J.K. Naiju, was Chairman of Session.
We take it for granted nowadays that these big tech companies know more about us than almost anybody. And it's part of life. And that is the model, that the disruption that these companies have created, have enabled in terms of giving us a huge amount of personalized service. But they don't do it out of the goodness of their hearts. They do this because they are able to monetize our data and generate revenue through this data. And we are gladly giving up our privacy because we also see value. You use these applications because there is value. You are able to know how quickly you can get to a place, what's the best route, and that is the model that this disruption has taken. It's connected to the basic needs that we have and has been able to unlock value for us. We, however, now have to look back and ask, how can we unlock value from them? There is a huge element of analysis called big data. Big data essentially is compiling huge amounts of information and using that in terms of leveraging and driving the growth of businesses. And as our paper presenter has mentioned, these platforms run by these disruptive companies all use this type of big data analysis that can be used to source tax relevant data. So the question then is, how digital are we? How well connected to such technologies are we? So that when we have these platforms open to us, we know what to do. Because they can give us all the access, all the information, but we must be able to come, to the table with the right skills, the right capabilities to be able to leverage this and unlock value for us in terms of revenue and taxation.
No country can invest in infrastructure without growing their tax base. It is critical to national development. Now, for the tax part of our tax to GDP ratio, we are not even capturing the real tax. What we see as tax is just what goes to government that is recorded. From the taxpayer's point of view, there's a lot more tax that is collected. The tax that is collected by illegal tax collectors, who are both inside tax administrations plus outside tax administrations. We need to move that tax to be recorded, to go to government. And government is all of us. Government is also not the tax administrators. Government is also those who spend the money. Because what that does, it builds credibility for people to want to even pay more. I like the definition of disruptive technology, to change human behavior. We need disruptive technology in the Nigerian tax system to change human behavior, from collecting money for pockets to collecting money for country, for using money for good, to invest in health, to invest in education, so that we don't have that conversation of where's the money going. To ensure that we are even using technology to drive how we spend our money. And also to show accountability on our phones. We should be showing monies collected and how the money is spent to encourage people to even pay more.
There have been several usages of digital transformation, digitalization, and of course, digitalization. But the key thing here that will help us to generate more revenue for tax, through tax, is what is known as a digital transformation. I quickly just want to share 5 points related to successful digital transformation work point. The first one is customer. Taxpayer is a customer. We need to see taxpayer as a customer, or else we will not generate more revenue. Competition, there must be healthy competition. Data, we must be able to convert data into value. It's not just having the data and just having the facts. Innovation, we have to be very, very innovative. Then value, which is the key one. We must be able to create value in order to ensure that we have what we call efficient result for our tax process. As technology changes, tax professionals and tax administrators must also change. You cannot stop things to happen, or else it will sweep you away. The big question is, how are we going to tax a robot if you don't embrace technology? Robots will change people, so pay will go down. Then the question is, how are we going to tax robots? We can grow our tax to GDP ratio simply by embracing digital transformation. That's just a simple way. And of course, we need to simplify our tax process. Our tax process is too complex for an ordinary man to apply. Now, in conclusion, it is obvious that if government creates more enabling environments through digital transformation, it will surely generate more revenue rather than introducing a tax or increasing the existing tax base.
The formal opening ceremony followed the paper presentation and panel session. Special guest of honor was the Vice President, Professor Yemi Osinbajo, who was ably represented by the Executive Chairman FIRS, Mr. Muhammad Nami. Chairperson of the 24th Annual Tax Conference Planning Committee, Mrs. Ruth Arokoyo, gave the rationale for the choice of the theme of the conference.
It is no longer news that the most sustainable source of revenue for the federal government of Nigeria is through taxation. Therefore, focus and attention must be on how we can generate revenue that will sustain the economy of the most populous black nation in the world.
Mr. Adeshino Adedayo is the 15th president of the CITN.
The world witnessed an unprecedented disruption in 2020 with the COVID-19 pandemic circling the globe, which led to economic downturn. Your Excellency, governments, businesses, and tax agencies have been tackling the new challenges strenuously. As tax professionals, we should be more resilient and provide lasting solutions to mitigate these disruptions.
Professor Yemi Osinbajo, represented by the Executive Chairman FIRS, seized the opportunity of his keynote address to re-emphasize the preeminent position of tax practitioners and tax administrators in national development.
As you are aware, the world had witnessed uncommon undulation in prices of crude oil since the year 2015, when this administration started. And in the long run, this will dovetail in global move towards green energy, which will further weaken the demand for crude oil. In all this, one lesson stands out, that if we must make progress as a nation, all of us, countrymen and women, must surrender an adequate part of our substances for the sake of our national development, social harmony, and political stability and economic growth. Everyone must be prepared, not just to pay their fair share of taxes, but also to ensure that all others do the same.
The 24th Annual Task Conference was indeed an intellectual feast. In the course of the three-day event, 3 papers were presented just as there were panel sessions. There were other side attractions, health talk, networking, sporting activities, and of course, the gala night. Stay with Tax Matters for more blow-by-blow accounts of activities on the 24th Annual Task Conference. This is Chiamaka Ohauchi reporting from the International Conference Center, Abuja, the venue of the 24th Annual Task Conference. See you at the 25th conference.